Right. Looks like we have a good number of folks here, so we can just go ahead and get started. So I'd like to say hello to everyone again, and welcome to today's webinar on adjusting assets. I'm so glad you could join us today. We've really got a great session lined up with someone who truly knows the topic inside and out, and that's our own Angie Bolton. And I say our own because she recently joined Sage Fixed Assets as our Senior Product Manager. Angie isn't just someone who talks about asset management. She truly lives it. She's got 26 years of hands-on experience as both a user and a consultant. So she's really been in the trenches, navigating asset adjustments in all kinds of different industries, settings, and scenarios. And as you will learn, she's really seen it all. So from everyday changes to complex business critical adjustments, she is going to be able to guide you on just about anything that you can come up with. That is what makes her such a knowledge expert, by the way. She really understands not just the how, but the why behind those best practices that she'll be covering today. So with that, we're going to have an open Q&A session today where we hope to unmute our mics. You can still put your questions in the question area of your dashboard if you choose to do so, but feel free. We will try our best to raise hands and get you actually talking one-on-one with Angie shortly after we finish up here. So with that said, I'd like to go ahead and turn it over to Angie to get us started. Angie, welcome.
Thank you, Tani. Thank you for that great introduction. And welcome to everybody on the phone today. I'm so glad you're here and so grateful that you're here to discuss and move the needle forward on these asset adjustments within the Sage Fixed Asset Depreciation module. Just to get started here, we're going to go through the agenda, and I don't have as many slides, so I really want to kind of get into the thick of it and get questions answered. So at the beginning, we're going to talk about understanding asset adjustments, the key critical fields within the depreciation module, their impact on the system or your reporting, your compliance, your day-to-day, common adjustment scenarios that I always see, no matter what. There's always some commonality. Data is just themes, right? Best practices for accuracy, compliance, and then we're going to dive into the software. I'll show you around a few things that we talk about throughout these slides, and then also take your questions for some real-world headaches or examples. So first, we have to understand adjustments, the definition and importance of these asset adjustments, right? So we get asset adjustments, they come in all the time. We'll get into some common things that we see, but we have to modify these things to reflect these changes, specifically for financial status, operational use, maintaining accurate financial data, for GAAP, for tax purposes, but also for property tax, for insurance, for anything and everything that touches a fixed asset. We need to get these adjustments in on time, or at least close to on time, moved out of CIP, moved out of APPO, those sort of things, and into our subledger. And then there's some things that we want to touch base on too, or later in the slides, but when, how, why do we do these things? How do we do that in the system? How does it impact the system, our calculations, our reporting, all those things? Where can we go to find what we did in the system for adjustments? So adjustments can be many things, right? Why proper adjustments matter? So proper adjustments, right? So a lot of people will do adjustments that I want to say proper because I've also seen a lot where people aren't doing them correctly. So they'll either create a child asset or they'll only update one book if they're keeping track of all the books because they have lack of confidence in themselves or in the system itself, thinking they're going to break the system. So proper adjustments matter because if we're properly using the system to help us with these adjustments and doing it the right way, it will also impact our financial statements for depreciation expense. It also impacts, if we don't do it right and we do it improperly, it also affects things when we look at asset valuations or when we go to wanting to impair these assets or when we do property tax and compliance and audit readiness. If those asset adjustments aren't properly recorded where they're supposed to be and how they're supposed to be impacted going forward for depreciation calculations and reporting, then we do have some problems. We're misaligned with how we're reporting our assets up through the IRS, through our GAAP, and internal policies too. You know, a lot of people have these internal policies that tell them exactly how they should be properly managing these adjustments that come over either from CIP or a credit they received perhaps on the asset, or in economic times such as we have seen in our landscape over the past few years or more, where we need to do asset impairments, or we're going to get purchased, right? We're looking at getting purchased through M&A, and therefore our assets are going to go through a strict M&A process. If we don't have those adjustments properly recorded, that's going to fall short. Also, operational accuracy, so informed decisions on capital planning and asset management, disposals, right? If we're not properly taking care of these asset adjustments in our system, then what happens too is that down the road when we start to look at what are we disposing of, what are we transferring to another location perhaps, and maybe we don't have all of the asset adjustment, all the costs associated with that. Maybe we don't have the right place and service date associated with that. Maybe the lives are incorrect because, you know, we had turnover and someone didn't know the policies and they put the asset into service with the incorrect methods, lives, those sort of things. I've seen it all. So this is why proper adjustments really matter. And how do we do that in the system so that A, we can feel confident about using the system, B, we can use the system for audit readiness, showing accountability, what happened, when, where, why, who did it, and those sort of things. So in the stage fixed asset depreciation, we have what we call critical fields, right? So we have 5 critical fields is what we label them in the stage fixed asset system. The first one, these aren't in order by any means by the data entry order, but they do have a huge impact, and these are the 5. So the first one is estimated life. So the estimated life of the asset, how changing an estimated life affects depreciation, future calculations, and the differences between state, tax, ADS, and GAAP. If those of you on the call today are not using stage fixed assets for tax depreciation purposes, I don't know why. It is the biggest return on investment. You should always put all of your eggs in one basket with fixed assets because they go out into 8 different places. And if you're thinking, oh, well, I don't know tax, I'm a GAAP finance user, that doesn't matter. The Sage Fixed Asset product is spectacular on assisting and holding the hand of any financial GAAP user in accounting or finance to input the correct tax information. The things we need to be mindful of when we do that, however, are these critical fields when we need to adjust the life, the cost, the method, the place of service date, and property type. But most importantly, the cost, which we'll get into next. So estimated life, I get this a lot too. I'm a finance user, Angie. I have these tax books I have to maintain for tax because it makes sense, right? But how come GAAP and tax aren't the right life? Well, that's a great question. Most of the time, they are not the right life. Tax gets depreciated differently than GAAP. That's the way it is. They use different methods. They use different expense deductions. They use different lives, those sort of things. So if they don't look the same, then that's actually probably accurate. I always say, go back into your policies and procedures internally. Hopefully you have one that outlines what I call a depreciation matrix, which just says, if class or classes are this, then tax depreciation method and life is this, and GAAP is this, okay? And there are differences between ADS if you're keeping track of that too. Although it's kind of in line with GAAP, it is different, and they do have different lives that impact financial statements. Acquisition value. This is probably the biggest critical field that gets adjusted. Why? Because we always have an increase or decrease on this asset cost that impacts the book and the tax depreciation. So when we're talking about acquisition value, we're talking about late invoicing. Maybe it didn't get moved over from CIP on time. Maybe we found something in AP or PO that was stuck in there a long time ago, so we're finally getting around to cleaning it up, and we noticed, oh my gosh, this needs to go against this asset. So we need to go back into the system. Or perhaps we got a credit. Or we had, I talked to a customer not too long ago that had a forklift. It was a lemon, it broke down. So then they were getting a new one to replace that. So we also have to think about those sort of things. Do we affect that with the new asset? Do we take that with the old asset? So things to consider when making these critical field changes. Also with the acquisition value, there are certain times when you have adjustments that don't actually pertain to all the books. And then sometimes they should be impacting all the books. What do I mean by that? So an asset impairment, for example, in this landscape of today in our economy, we have a lot of impairments happening across the board. I see it across pretty much all industries at this point in juncture, and quite honestly. But they only really impact the GAAP books. So if you impair an asset and you change that information in the stage fixed asset system, it really is only changing for GAAP purposes. Don't touch your tax books. It has nothing to do with that. Okay, so that is one example of when you don't use all the books. But if it's a cost change, so like I had sales tax, I had, shipping, I had an extra progress payment that I forgot, those sort of things impact also the tax depreciation, state, ADS, any other books that you're maintaining within the stage fixed assets. They should all get updated. More times than not, when I go into a customer's and they've been using the system for a while and I'm doing cleanup, I've noticed, or actually even data conversions to new, I've noticed where a lot of these changes were not updated in the tax book. Moreover, I see this happening if the tax depreciation is outsourced by a third party. And I hate to say it, but I saw it all the time and I still see it today, where the costs are different, because what happens when you use disparate systems or places to separate your depreciation by book, tax versus internal versus state versus whatever, there's always a disconnect, and typically it's down to the acquisition value, which goes to our previous slides of that's a huge impact all over the place. So, when you're doing these adjustments, you have to be mindful about all the books that are impacted by this, or are they, right? One of the other things that I've noticed and had conversations with not too long ago, because we just got through, for most of the world, not everybody's on a calendar year end, but for those that are, just went through, tax end, right? So year-end tax end. And some people have defined that they had assets when they were doing their year-end cleanup. They had assets that should have been placed in service back in November or December of 2024, but here we're in February, March of 25. There's some big impacts there when you're crossing those fiscal years, specifically if you're keeping track of the tax depreciation or state. Why, Angie? Well, because bonus depreciation has these rules, and each year is a different depreciation bonus percentage, right? That you're allowed to do. So last year was 60% in tax. This year's is 40. So if I place this asset in service in 2024, and I already took care of 2025 for tax purposes for all of their, projections and everything, then what happens there? Well, then that asset just got missed. So in the system, it had already taken and flipped for the 60%, but I placed it in service, but I didn't run depreciation. I already ran depreciation for December. So I go back, I enter the asset in November, I run depreciation for March. It's actually going to be miscalculated for tax purposes, because now instead of the 40, it's the 60 and should it, so these are things that you have to think about. Or what if the assets are there, but the adjustment should have occurred in 2024, right? So the asset is already in service, has been in service, let's say 2 years, or in that year, earlier in the 24. And then in 25, I have new costs that I need to put against this asset, and I'm keeping track of my tax state and my GAAP. I've already crossed fiscal years. What should I do? Well, you really have to think about, how is that going to impact the tax book now that you've already taken the 60% bonus? Because if that adjustment should have been in 24, now you've already messed it up for tax purposes, right? So you really have to be mindful about what's going on in our system. When was this asset placed in service? How is it impacting across all these different depreciation books? And then how should we move forward, right? The next one is the place in service date. So just in case people don't know, in the stage depreciation system, the acquisition Date is a user field. It's up in the book depreciation. It's not in the book depreciation fields. It's up in the general fields section. It's there because it does not calculate depreciation off that field input. The only field that starts initiating calculation of depreciation is the placed in service date, which is part of the critical fields, which is located in the book depreciation fields below. Okay. There are many adjustments for reclassifications or errors and timing changes. What that means is back to the fiscal year and crossing impacts of that, maybe quarter impacts and monthly impacts too, right? So when we think about place of service date, adjustments for reclassification or errors and timing, we do have to be mindful of that too. So these are things that we just need to slow down and see and ask ourselves, what are we really wanting out at the end of the day? What does this need to look like? It's going to impact our GL too. We'll probably have to do some manual adjustments if we play around in the subledger with existing assets. Things that impact place of service dates for these adjustments are often purchase price allocations, changes or updates, sometimes impairments, but most of the time impairments affect the current accumulated depreciation. So we don't really see the place of service date there. But also with the place of service date, we'll see that, oh, it actually, I see this a lot too when we're starting to reconcile between CIP and depreciation, specifically if CIP was taken care of and managed outside of an automated system or outside of the Sage CIP software. What I'll see happen is when they finally get to reconcile that data, they'll notice that that asset was actually placed in service a long time ago. And now they need to reflect that in the subledger. And you need to do that because that's the best practice for auditing. Because lo and behold, the auditor comes, they cherry pick that asset and they reconcile it against the CIP, and all of a sudden someone's in trouble. So it's good to be mindful and do that ahead of time. So those are some things to think about for place of service dates. And finally, depreciation methods, considering when to switch methods. So there's, for tax purposes, there's 3115. That's if we decide we're going to change everything, all these different depreciation methods for this particular class of assets. Now we need to fill out this form, and then we need to go back into the system and update these methods. So there's best practices to do that. What's great in the system is you can do that by bulk if that ever happens to you. You do not have to do that one by one in the system. In fact, there's quite a few things when you're talking about adjusting my assets in Sage Fixed Assets Depreciation that can do on a global scale. I remember this one quick story for depreciation methods in particular when someone wanted to take bonus depreciation on the assets in tax, and they turned it off at first, but now they want to turn it back on, and they literally thought and did this very thing. They went in one asset by asset by asset, and I was almost crying with them because that can happen in the system by bulk. It's literally a switch. We actually call it the 168 bonus switch, where you can group those assets together and make that switch globally, so you're not doing it one by one. Okay, so these are some things that you have to be mindful of too, about, again, what do I want to see? What is the outcome I'm looking for when I'm going to make these adjustments in the system? And then finally, number 5, the critical field is property type. Property type 1245 versus 1250 and other. What that means is that's that first entry in the book depreciation fields, right? Is property type. 1245 is personal property versus 1250, which is real property like buildings, land, building improvements, those sort of things, some leasehold improvements if they qualify under that. Other means like, amortize, or if they're in, different zones and stuff like that. So there are different property types out there available. The big problem I see a lot when we're also taking care of tax versus GAAP in the system is people will just put everything under P, personal property, and that's a problem. Or they'll bulk assets together. That's for a different session, or maybe some questions today of how we unbulk is a good adjustment thing to get into. But a lot of people will bulk together building improvements, and they'll put our real personal, real property under 1250. The problem is that when we dive into the CIP piece of that, that bulked entry, we'll find that half of those assets should be broken out into personal property. Why does that matter, Angie? That matters because if we classify that under personal property, all of a sudden now we have bonus election in our tax books. This is another reason why I'm such a big fan of putting all your assets into one system, regardless of the depreciation book you're looking for. Because when we have more control over our assets, we can clean this up, which then, this is why keeping track of your tax books in FAS, if you're not already, is the most big impact of ROI you could ask for. Because what happens is when we have control over these assets and we see these bulk amounts of like millions of dollars under a classification of building improvements, when we dive into that, because we have that information internally, the outsource, they don't have that information, we do. So we can take it upon ourselves to dive into that information, break those assets out, and now all of a sudden get bonus depreciation, which is money back in our coffers, back in our savings, and then also back into our profits, right? So when we look back in that, then that could be affecting a bonus. I mean, I've seen that happen many times at other businesses. In fact, because the place I used to work at last before Sage as a user, it did impact bonus. And I'll tell you what, the depreciation expense that we uncovered because we kept such good records and broke everything out gave everybody a little bit more on their bonus. So I'm just telling you, there's some serious ROI in this system if you use it to your benefit. So those are the 5 critical fields. And if you look at the data entry in the depreciation module, you'll see the first 5 fields in the book fields are these critical fields. So common adjustments when we talk about, well, what do those look like? Acquisition costs could range anything from late invoicing to progress payments to credits, right? So again, coming from CIP, APPO, late invoicing always happens in fixed assets. I think that in 26 plus years, I've seen it all, and I don't. People always surprise me. I'm like, oh, I never really thought of that. That's interesting. But we can do that in the Sage fixed asset system. That's what it's so flexible. It allows us to do whatever we need to do because fixed assets is messy. It is messy. Okay, we can correcting or adjusting the lives. Capitalization policy changes. Sometimes we go through a different policy change, especially through an MMA, and our policies change, and then we'll have to adjust our assets going forward. Asset impairments, and again, purchase price allocations, which typically, sometimes it depends. If it's a stock purchase versus an asset purchase, we might be changing the tax books, or we might only be changing the GAAP books, where tax books have to roll historically. Another great reason to keep all your assets in the system across all books. Because let's say for purchase price allocation, this is a big one, actually. This impacts so many different ways. When we go through a purchase price allocation through M&A, what happens, or maybe that's how we started a long time ago, and then we got into the system and things don't look right. So meaning they're not depreciating fully at the end of its life cycle. We have this net book value floating around. Why is that? Because it came over from a different system initially incorrectly. It's not that the Sage system did it wrong. It's that it came over with an incorrect calculation, either over or under, before we even got started with Sage, and now it's at the end of its life, and now we see the problem, okay? There are ways to correct that as well. But purchase price allocations, if it's a stock purchase, then it only affects the internal book. Those costs will only get updated. If it's an asset purchase through M&A, then for all the books, the cost gets treated differently. They all get a new cost. They all get new lives or remaining lives, whatever they deem. They meaning a PwC or any of the big 5 or Deloitte or a Kroll or any of those deems as necessary. But they'll all get changed. Now the big thing here with purchase price allocations is if it is a stock purchase and only GAAP is being revalued, you now want your asset data for tax, state, AMT, well, not really AMT anymore, but we'll see, internal GAAP, and maybe an ADS if that's what you qualify for, or anything else. You want that in one system. Why, Angie? Why do you want that all in one system if I just went through a purchase price allocation? Well, because you will need that historical cost, that historical record, of which the tax, state books, and all of them will still have and still roll historically forward. You will need that, and you will also need the estimated lives that were beginning of that. You will need that. Why? For property tax purposes, for insurance purposes, and for capitalized budgeting purposes. You will want to know the original cost of these assets so that you can make better decisions, so that the property tax, so you're reporting property tax accurately because it wants original cost, not your new cost, and going forward. So again, another reason to have everything in one basket. Clearly, I'm passionate about it. These are some common things when I started talking to customers when I got here. I noticed that people don't have the confidence in making these adjustments. And I can see that. I can see why that might be a problem. But here's what I'm going to tell you today. You cannot break the fixed asset depreciation system. You can't do it. There are so many ways that it helps you and guides you and saves your life. First of all, if you're doing a massive global change, you will want to do a backup of your system and store it elsewhere so that if you really felt like you messed it up, you can restore and overwrite and start all over again. Okay, that's number one. Again, if you're doing a massive amount of changes, do a backup. If you're not doing a massive amount of changes and you're doing one, that is okay. People get to 2 screens, and I'll show them when we dive into the software. You start, let's say I'm changing the cost. I go and I change the cost, and a little dialog box comes up and says, you're about to make a critical change. Are you sure you want to do this? And 9 times out of 10, people close that box and don't do it. They're like, I don't know what I'm doing. Oh my gosh. But if you go to the second box that says depreciation change, it gives you different choices. This is a bad photo, but I'll go into the system and show you too. But by default, it goes to current through date. What the Sage Fixed Asset System is doing is seriously holding your hand to the least messiest possible choice there is. Current through date means from the time that I have made this going forward is when I want this to make a change. What the system is helping you do is ensuring that you're not going and resetting depreciation all the way back to day one. They're saying, I just ran, so today's March 19th, right? So if I ran depreciation for the end of February and I'm making this change for March, what's going to happen when I do current through date by default? So if I move through these screens really quickly, what the Sage system is doing is really nice. It's saying that when I make this change in March and I don't do anything but just go through these defaults and accidentally go okay, it's saying that I'm keeping my February depreciation amount and I'm putting that in the beginning fields so that whatever happens, I didn't overwrite last month's run. And so I didn't overwrite last month's GL entry either. Whew-wee. So all it's saying is now for this new adjustment, I'm gonna run March with this new cost and go forward with that. So we're not erasing anything back. This is where you can't break it, okay? Now let's say you didn't do that, and I did mess up because I hit place of service date because I wasn't sure what Angie said. That's okay. If you go into the history tab of that asset detail, so I'm in that asset, I accidentally did the wrong thing, I can go into the history tab of that asset. I can see the details of that history of critical changes, and it'll tell me date, timestamp, who, what I changed it from, what I changed it to, so that I can make a screenshot of that. I could write that down. I could go back, fix the asset, and start all over if I needed to. Okay, so there are lots of ways that the system is helping us through this transition process of these adjustments. And again, you cannot break the system. So hopefully we'll have confidence after today. So some best practices, I always like to throw these in. Keeping an audit trail, documentation, system tracking. So reporting, I'm going to touch base a little bit on these utility reports. If you have the depreciation premier version, which is the SQL version, there's utility reports that are really amazing audit trail on any changes on these assets. I used to work at a Fortune 500 publicly traded manufacturing company in aerospace, okay? We had 120 locations globally. And these utility reports saved our life for SOX purposes and audit. Okay, we needed to know who made changes when and where, and these reports were golden. So I want to show you today how you can use those reports too if you have the Premier version. Reconciling with reporting. So the asset snapshot, this is what I use too. The asset snapshot is beautiful if we're keeping track of all our assets in one place, meaning the tax book, internal, state, and so forth. We can see in a snapshot without even running anything if our numbers are rolling forward every month. If they aren't, that means that an adjustment occurred to our assets in one book but not in the other. Why? Now we have to dive in and find out which ones those were, okay? So also remember your custom asset list views are super helpful in determining what the costs were, different changes, because we can adjust those views, save those views, and then pop them out to Excel and marry those together by book and do a quick reconciliation. That's probably the fastest way to get your answer of unreconciliation, okay? And I'll show that in a minute. Ensuring adjustments that don't trigger other issues, meaning what we talked about earlier slides is proper, right? Proper adjustments. We don't want to trigger other issues with compliance or reconciling other books or misaligning our GLs too. So things that people forget that, if there's a misalignment between GL and the subledger, it usually comes down to an adjustment that occurred that someone didn't take care of at the time. And that also happens a lot in turnover. We see that and it's out of our control and we're not a victim. We're just gonna have to go fix it, right? So those are things too. And again, the crossing calendar of fiscal years, we have to be really mindful of that when we do these adjustments, specifically to if we're keeping all our assets in one basket across multiple books. So I'm going to do a show and tell. I can take a couple questions, Tawny, while I'm, transferring screens as well, if that's helpful.
Yeah, Angie, for sure. If you have a question, go ahead and raise your hand. There is a little hand to raise icon by your name. And if somebody doesn't see that and you still have a question, then go ahead and put it in the questions box and we'll make sure it gets answered. And we already have several in there. And Angie, I think probably my favorite part of that is that you cannot break Sage Fix assets. That is amazing.
Yeah, you cannot break it. It has so many saviors along the way, which has really helped myself personally too, not only with data from where I worked at, but also for other customer data when I was doing consulting and conversion work. So it's really, really, really helpful to run through that.
I'm gonna go ahead. I can actually unmute all, so I'm gonna go ahead and do that. But in the meantime, there's lots of questions coming in. So there's one here from Manisha. How can I show depreciation recapture on Sage Fix assets?
Recapture. How can I close a group of assets and entity that were ended in 23, but will need to stay in the group for record purposes? Manisha, are you still on the phone? Do you want to chime in about your first question?
Well, I went to unmute all, but it doesn't actually. Oh.
Hello.
Yep, there you are.
Hi.
Yeah.
Hi. Yeah. So there's one property that I need to create a recapture for, which means that we had a change in like we want to treat it as a recapture, but actually there was a change in the cost of the actual asset, but my workplace wants to treat it as a recapture instead of going back and changing the actual cost. But the thing is, we can do it on our, like if I were to do this manually in an Excel, I can do it. I just don't know how to do it on the actual software, the Sage software.
Right. And recapture, are you trying to put like the accumulated depreciation that you're trying to recapture?
The cost and the accumulated, right?
Yeah, okay. So the cost, if you just make the cost change in the system and run the calculations, the system should be able to recapture what it is.
So it's an old cost. So this was something that was already booked in maybe 2019, but they made a change now in 2025. So,
Okay.
but in the books they show it as a like for book purposes, it is shown as a credit memo. But in tax, we don't do that, right? For tax, we
Right.
have to we will have to actually show it as a reduction, but we can't show it as a sale also, because it's actually a whole thing that was
Yeah.
bought in 2019 that is still in service. It's a software, so you can't really like show it as a sale unless you show the entire thing as a sale. So
Right.
how then we decided to do it as a recapture. Yeah.
Right.
Hi,
So
this
what?
is Ann.
Yep. Go ahead.
I'm wondering if you want to change the cost and only have it change for future periods. So it was a
Mhm.
2019 asset and you want to change it this year as needed, the acquisition value, and spread out that change in depreciation over future years only? Is that what you're saying by recapture?
I think that would be right. Yeah.
Okay. Yeah. So what you could do, this is a bad asset example. Um, what you could do, hopefully, is make the change. So can everyone see my screen? Because I can't see what everything is doing. Um, mhm.
We can see
But
it.
also, I want to point out that we've already taken the benefit of that deduction, right? In the past years, we have already taken the benefit. So if we were to go back and change the actual asset, like the cost value of that actual asset without showing it as a recapture, then then we would have to go and amend the previous returns, which is not cost wise not very effective. So the only way to do it is to show it as a recapture.
Sure, that makes sense.
Mhm.
What you could do is make the change, like Anne was saying, as of current through date, right? But what you
Mhm.
want to do in the internal book, instead of whatever method you have, you'll want to do
Mhm.
RV, which is remaining value over remaining life. So what it does is it takes that deduction and it'll slowly take it equally throughout the rest of its remaining life of that asset for internal book. You will have to make that adjustment to GL, which you probably already have if you're keeping on a
Right.
spreadsheet,
Right.
so that at the end they'll match. But that is the way that you would want to do that. So make the change of the deduction, current through date, and then change the. Sorry, so I'm trying to do two things at once here. It's not always works. And then change as current through, and then you'll want to change the method to RV, and it'll say
RV.
another, do you want to make this change? Yes, as of current through date. And then going forward, then it will equal itself out for the remaining value of that life. So you'll see each month this different cost, but it'll be the same each month, so that at the end you get a zero at the end of its life.
And for the tax book, the method you pick, what was the method used in the tax book for
Um,
the?
so so it's actually an amortizable asset. So it's actually,
Oh,
and yeah, so
Yes, so
we
you could do it
actually
both.
decide, yeah.
Mm-hmm. Mm-hmm.
So it's like a
Mm-hmm.
Z asset.
Because it's
Yeah,
software. Yeah.
as a software, yeah, the intangible asset, yes.
okay,
Oh,
great.
is it
Yeah,
fully
RV would be
depreciated by
perfect.
now?
No, no, that's the thing.
Okay.
It is still in
Okay.
use, not fully depreciated as well.
Okay.
Because we are amortizing it over a period of 15 instead of
Oh, 15 instead of 3. Oh,
yeah.
is it SaaS software? Probably.
Yeah, it's the same
Yeah, that
software.
makes
The
sense.
same
Yeah.
software as this. Yeah.
Mhm.
Mhm.
Just a
Okay.
couple of quick, thank you, Manisha and
Mhm.
Angie, and just a couple of quick
Thank you.
little notes from Ed and Anne, in that, just to clarify, access utility reports are available in single user, network, and Premier.
Oh, good. Okay. Thank
Yeah,
you for clarifying that.
sure.
Okay. So when I make it to critical depreciation change, let me go back. This is where most people dive off. And if you read it, it's just saying, are you sure you want to do this? We're going to continue. Nothing has happened yet. And you say yes. And then you get this screen. And I only have two choices right now because that's all I have in this asset. I don't have any beginning fields. And if I scroll down, I also don't have any period close fields. So these are my choices here. right? And again, by default, it's choosing the best case scenario, the most safest choice in the system, which means from this point forward, from my last depreciation run, I'm making this change to go forward. And so I'm not zeroing out anything. I'm not going backwards in times. I'm only going from here forward. And then it tells us that the beginning information fields will be reset. What does that mean? That means that when I just ran depreciation for 12/21, what's going to happen is now that information is going to get pre-populated in beginning date. So I'm going to have a 12/21 date here and the accumulation in of that time here, which is awesome because see how that, or 22, excuse me. So see how that kind of carbon copied. So when I go forward with my new costs, my deduction or my addition, now it's going to go there. And then what happens is if I ever have to make an adjustment to this asset again, which happens a lot in fixed assets, now I'll also have the choice of going back to the last time I ran, just in case I messed up there too, right? So now I have this, yes, and now you'll see I have this as a choice. So I'm actually, if you think about it, of the whole, I'm not breaking it because I'm giving myself choices of time to go back to, right? And then I can go to the history tab of this
Is this where
asset.
you changed to RV to at the same time that you changed to the
Oh, I didn't
cost
touch that yet
benefit?
because of timing here. But if I change, that's a good question. If I change RV, it's going to ask me the same question. So I can't do 2 or 3 changes all at once. I can only do 1 critical change at a time, and they all get their own option. In the history tab, this is where I could see change book information. So if I even wanted, if I had a big asset, I could also sort by that, but it'll tell you exactly what happened, what book it affected. This is also really helpful if you're using the tax books too with the internal, because you can also see if the tax book didn't get affected, it wouldn't be listed here. So then you could tell right away, oh, I didn't do this to the tax book. And then if you were like, well, someone must not know how to do it, it'll say who the user was so that you could also go and train your staff too, is a good thing that I used it for. So I know we have short on time, so I just want to move through a few of these things. I really, so the assets, excuse me, the snapshot, this is what I used as well, which was helpful just to do acquisition comparison. So you can export this out by book, and you could keep them if you want to, but I would just look at this each month just to make sure that it was rolling okay. And then depreciation by book, I was also pushing this out just to make sure all the books were rolling okay. And if there was a variance that was already known because of purchase price allocations or whatever that I already knew, I just made sure that was rolling the same every month. And if it wasn't, then I know, right? Then I know that I made an adjustment somewhere and I didn't echo it in any of the other books.
Great. I think that answered Jay's question, and I'm not sure. We have one from Michaela, and I'm sorry if you answered this, but I'm going to ask it just in case, Angie. And that is critical depreciation. Excuse me. What is the process of changing the lives of an asset in the middle of its depreciation?
Same thing, great question. Same thing that we just showed. So instead of acquisition value, you just go and change the life, and it'll ask you those exact same questions. You know, what do I want to go with, like current through book? If it's an asset that I placed in service this year that was totally wrong, you can go in and that's a good use case for going to and choosing the place in service date, right? So if I entered it in 2025, I'm already 3-4 months in. It was totally incorrect. That is a good use case for saying going back to the place in service date, updating it, and then rolling it forward, and then making that adjustment to your GL. If I've been using this asset for a while and we've impaired it too, that's a different topic that we're going to be talking about in the next users group when we're talking too about tax books and other advanced topics. That also gets changed differently as well, which is also can be part of the estimated life. But you get the same questions and the same screens and the same effects with each of the critical field changes, right? So if I change my life, if I change my method, if I change my date, my cost, we get the same questions and we get the same hand-holding for each one. So I want to show the Assistance Center really fast the assisted utility reports, what I found to be really helpful is the history events. If I go history events, and I can choose whatever company or multiple companies, and then I choose book change information, and I can always set this as kind of a mini report writer. I can set it from a certain date and time. So if I wanted to say, the beginning of the year to now, and I just want to look at those because I've been doing it for a while, and then I'm not going to suppress, and I'm not going to do a page break. And then I go next. Sage did this. I'm going to say it, Anne, because Anne's on the phone with me, but because I use this religiously at the company I work for, and they put in this export to Excel, which was awesome because from here, I didn't have to go. I had multiple companies. So for those that have multiple companies, this is so helpful in determining the cost adjustments, particularly to help you reconcile back to your GL. Okay, this is why I'm showing you this. You can export this out if you have multiple companies. You can export to Excel, and they'll dump out into multiple companies with the naming convention for you, and then you can just marry them together and put a formula in, and it's super fast. Okay, before this is where, again, Sage development team really listens to the customer's needs, because without this, it took me forever, because it would only dump it to, it would do Excel and PDF, but I would have to name everything and dump it out, and so much steps and so much time. This helps you get in and get done and get out. Okay, and again, it helps with reconciling. So I really wanted to show that today because it's a time saver.
What a great tip, Angie. Thank you. And then we have one question left. I didn't want to leave Tanisha hanging.
Yeah, for sure.
She said, I accidentally re-imported the same assets that were imported in 1224. I want to do the second copy of those assets.
Yeah, you can do that. You can create a backup first, even though it's messy, just in case you need to start over. You can go and you can delete those. There's nothing that's wrong with deleting those assets. The only thing I'll tell you is that you'll lose the system number, which is fine. Nobody should be tracking their assets by a system number. That's just the ID and the asset. You should be tracking your assets with barcode labels, company asset IDs that are a different field in the system. But if you need to clean them up, again, you cannot break FAS. So go ahead and go in with confidence. To get your confidence, go into each asset individually for now, just to delete. But you could group those assets together, those duplicates together through Group Manager, and then you can delete them that way too.
Wonderful, thank you. And actually, Jay snuck back in because I didn't have an answer. I didn't have you answer his. So just one more if we have time for those who want to stay. How does Sage handle the true up when you select current through date when making a critical change? Will it adjust the year to go to get things back on a cumulative level, or does it spread the cumulative difference over the remaining life of the asset in the computed depreciation expense?
That is such a great question. So I think this gets lost a lot in translation, specifically at the implementation level and data conversion level of Sage fixed assets. So there are two things to answer that question. First, the one example we used already when we went in here of the RV method, so remaining value over remaining life, no matter what you do, if you choose that method, it will take that cost and just do that. Remaining value remain. It's a straight line method, and then it'll do remaining value over remaining life, so that it takes that adjustment over across the rest of its life, right? And gets you to zero. If you're like, Angie, that's great, I already have these assets that don't seem to be depreciating right, or I did not do RV, another thing that you need to check is your company settings. So if I go to edit company, there's these book overrides, and these get lost a lot in data conversion and implementation of the system, quite frankly. They sit by default to none when you, so out of the box, FAS out of the box, new company, put your data in, none is adjustment settings. What that means is that if you want your assets to adjust accordingly by calculation, depreciation, you need to use the RV method. If you don't, you might have assets that mainly come over from other systems too, that have been incorrectly depreciated before they came in the system. And what this means is that at the end of its life, you're going to have this net book value there, and you're like, what is this for, right? Whereas if you go and change these settings, immediate means as soon as I make this adjustment, the system will immediately take that adjustment as of current through date, place of service date, wherever, right? Well, not necessarily place of service, you're basically wiping it out and starting fresh. But current through date or beginning date, I will immediately take that adjustment. You'll see that occur, and then it spitters out, right? So you'll see a big adjustment on that month to catch it up, and then it'll equal itself out without the RV method, right? Well, post-recovery is a little different. I only see people using this in a large organization where they don't always need the expense right away. They can defer it. Where post-recovery means at the end of its life, you'll see this amount that's there, this net book value, even though the asset's fully depreciated. In the next fiscal year, it will take that adjustment and it'll wipe it out. So you're basically deferring it to the next fiscal year. This is not for everybody. Most that I see is immediate. And none, but you have to be mindful that you need to use the RV method to do that. And we'll touch base on that in the next users group meeting because it's a really important piece, these adjustments.
Great, thank you, Angie. Are there any last minute things that you'd like to share with everybody before we say goodbye?
I think, just be mindful of things, have confidence in the system. Again, you can't break it. You can't do much to mess up your data. If you're going in to do anything major, just do a backup super fast. It's a user-based backup, just in case you don't know. It's file, company utilities, backup. And you have to be out of the company. You can back up all companies at once if you want. Go next, give it a name, and it dumps it out so that if you ever need to retrieve it, you can go to restore. So same direction, same path. Restore, it'll look for that .bbk file, which is a best backup back in the day. And then you can, if you did multiple companies, you can select one company out of the multiple at a time too. So be mindful of that too. Like if you have multiple companies, you want to do a backup, you can do all of them. But if you need to retrieve one, you can retrieve one at a time, even in a group backup. So
Thank you, Angie.
yeah.
I have one pressing question from Ed, and that is, he wants to know, will I lose the system number even if I haven't run depreciation?
Well, he knows that. So he's probably asking for the people that always ask him. I will address that. Yeah. You will leave the system number. As soon as you hit save on that asset or you import that asset and it becomes a line item in the system, regardless if it's depreciated or had any activity on it, is if it's saved to the system, it has a system number.
Fantastic. And that is it for today, folks. Please join us for next month's session. And I thank you very much, Angie. You're so insightful. You can really tell that you've been loving fixed assets for 26 plus years. So appreciate it.
Long time. Love it. There's always something new.
Appreciate everybody's input and questions as well. That was fantastic.
Thank you, everybody. Thank you, Tawny.
Take care, everyone. We'll see you next month.
Thank you.